Can you get rich off the stock market? What the heck is the stock market? Welcome to the channel, guys. My name is Chris. Today we're going to go over the Dow Jones and the S&P 500 charts, what the heck the Dow Jones and the S&P 500 are. Then we're going to go over some average returns for both of these index funds. We're going to go over some of the companies that are in both of these index funds. Then finally, we're going to mess around with a compound calculator to see if you can get rich off the stock market. So hit that spicy like button, hit the subscribe button, and let's get started. So first up, guys, let's talk about the Dow Jones chart. So here's the Dow Jones chart. This is usually what people are talking about whenever they're talking about the stock market. So as you can see, it's a chart from 1902 all the way up until 2020. So let's go through this a little bit. Right here, you can see the Great Depression. Here's the Great Depression, when the stock market fell to an all-time low. Then as you can see, we climbed and climbed and climbed through the 60s, 70s, 80s. We get into the early 2000s and we have this small recession here, which was called the tech bubble. Then we have our Great Recession in 2008 through 2011. And now we have the coronavirus recession right here. And actually, they show us a bigger chart of what kind of happened. As you can see, it hit a peak of almost 30,000. Then it fell off a cliff. Went all the way down to 18.5, I think was the bottom of this. But as you can see, we've recovered since then, and now we're back almost to all-time highs. On this chart, we got the S&P 500. Now this goes all the way back to the early 30s. As you can see, we started off at 0, 10, 20, 30, 40, and as we go and go and go, this just keeps growing. Here's the early 2000s recession, the tech bubble. Then we have the Great Recession in 2008. And ever since then, we've just been going up and up and up. And now we're almost at an all-time high of over 3,000. Those are the two charts that people are talking about when they're talking about the stock market. So now that we've looked at the Dow Jones and the S&P 500 charts, let's take a look at what this means and what they really are. The S&P 500 is a market cap weighted index of the 500 largest U.S. stocks. This means that companies with the largest market cap, defined as the total number of shares of the company's stock outstanding, the market price for the stock. Companies like Apple or Microsoft that have very large market capitalizations will have an outsized influence on the performance of the index. So it looks like the S&P 500 is an index with the 500 largest U.S. stocks in it, and it looks like it's the average of all of these stocks combined together into one index. Let's take a look at the Dow Jones. The Dow Jones Industrial Average is an index comprised of 30 large cap major industrial corporations. Over time, the definition of industrial has been expanded to include tech companies and other major influential companies. General Electric is the only original member of the index still included. Over time, companies have come and gone. Today, the Dow includes companies like Apple, Walmart, Microsoft, and Boeing. The S&P 500 and the Dow are two of the most quoted and influential stock market benchmarks and are often used as a proxy for the market. Let's take a look at some of the Dow Jones and S&P 500's average growth over time. So it says average stock market return over time. The Dow Jones Industrial Average's inception date was May 26, 1896 through May 25, 2018. The index averages annual return has been 5.42%. This has varied over time, of course. For the 25-year period ending January 6, 2012, the index had an average annual rate of 7.55%. For the 91 years prior to 1987, the average annual return was about 4.3%. So in like the last 30 years, we have about a 7 to 8% return on the Dow Jones, which is impressive. Now let's take a look at the S&P 500 and their average return. The S&P 500 index began in 1926 and was known as the Composite Index. The index was originally composed of 90 stocks. In 1957, the index adopted its current format of including 500 stocks. Average annual returns for the index from 1957 through the end of 2018 were about 7.96%. The average annual return from this inception in 1926 through the end of 2018 was about 10%. I know these charts are a little old, but let's take a look. Total return in 2017 was 29.11% for the Dow Jones. Total return in 2018 was negative 3.48%. Now this shows that the Dow Jones will not grow every single year, but over the course of a long period of time, they will grow. Because this 29.11% definitely beats the 7.55% that they get annually. For the S&P 500 index, total returns in 2017 were 21.83%. Total returns in 2018 were 4.38%. So this 21% once again obviously beats the 10% that they've been averaging. So you can see the S&P 500 will also not grow every single year, but over the course of time, it will. Now I'd like to take you through some of the companies that are in the Dow Jones. So we have 3M, and American Express, Apple, Boeing, Caterpillar, Chevron, Cisco, Coca-Cola, Goldman Sachs, Home Depot, a lot of big name companies that you should know in America. McDonald's, Nike, and so on and so forth. Verizon, Visa, Walt Disney, Walmart. So over the years, the Dow Jones will take all of these companies shown here and average them together, and whatever that makes will be your average for investing in the Dow Jones. Now, let's take a look at the S&P 500. My favorite. The S&P 500 has Activision. It also has 3M and many more companies in it, like Alphabet, which is Google, Amazon, which many of you guys should know, American Express, Apple, and we won't go through all of these, but just some of them. AT&T, Best Buy, Caterpillar again, Coca-Cola again. There's a lot of companies in this. Microsoft is in there. If you guys see any companies that you like, leave it down in the comments below. We got Twitter in here, Under Armour. The S&P 500 takes all 500 of these companies, averages them together, and they give you an annual return. This is a way to keep your money safe in the market by spreading your wealth through 500 different companies and investing in just one index. So you would have to bet on America failing for this index to go down. Now let's take a look at a compound calculator and see how you can grow your wealth in the market and see how much money you can really make in the market. So let's say you have an initial balance of $1,000. We'll say it grows at 10% a year. If you're in the S&P 500, calculated over 25 years. We'll go yearly for the compound. I know many of you don't have much money, so let's say you only have $50 a month to invest. Let's calculate this. As you can see, over the course of 25 years, you can make $72,992. You've only invested $6,600, but now you have $72,000. Guys, this is insane. This is what I'm talking about. With only $50 a month, you can have $72,000 in the course of 25 years. Now let's do some more spicy stuff. Now I know many of you guys have more money than this, so let's do $10,000. Let's do a 10% interest over the course of 25 years. And let's say you invest $100 a week, so $400 a month. And calculate that. So over the course of 25 years, with investing $100 a week, you would have $605,000. Let's see how much. You would have only put in $54,000, but you would have a return of $605,000. This is incredible. I'm going to leave a link in the description down below for you guys to mess around on this calculator. We went over the Dow Jones charts. We went over the S&P 500 charts. We kind of explained what the Dow Jones and the S&P 500 were. We explained the average return rate that both of those index funds will give you. And we also used a compound calculator to show how much wealth you can grow in the market over the course of 25 years. I highly suggest you guys click the link down below, mess around on that compound calculator, put in what you think you can invest every month, and see how much you can make in 25 years. So hit the spicy like button, hit the subscribe button. My name is Chris. Thanks for joining the channel, guys. Share this video. That's all for today. Peace out.